All right, market update time, but more importantly than the market update, to be quite honest, because the market hasn't moved that much. Not a whole lot has changed since the last market update. More importantly than that, I want to talk about strategy, because people just continually get this wrong. I don't know how to explain any more clearly, because I get DMs, I get asked, should I be buying Phantom right now? Should I buy this? Do you think what do you think now is a good entry point for this? And the answer is no. The move, the buying now is so much more risky than it has recently been. If it get a question, I like Phantom. Let me be very clear. It's like in my top 10 cryptocurrencies. It's way above the red easy band right now. Like I don't know, and we're in a bear market. Like we're in a bear market rally, but we're still in a bear market. Go look at the yield curve. It is super inverted. Nothing about this economy over the next year to 2 years looks healthy, right? Yes, we're in a bear market rally. Yes, our thesis regarding the S&P 500 getting a January and potentially a Q1 rally is playing out. But you are out of your mind if you think now is an appropriate time to be buying Phantom. And I don't care saying this if it just turns out to run to $2 or $3. I genuinely do not care. In hindsight, I will still say the right decision here was to not buy, right? Buying Phantom was the right decision back here, where I personally bought it and I ended up selling on a short-term trade. Would have been way more profitable if I would have held upwards and onwards for the entire move through this pullback. But I locked in profits, and when you're in a bear market, you lock in profits. GCR, this guy is touted or renowned as being one of the most successful, best traders in all of crypto. Just tweeted out, general trading principle as we watch meme tokens pump. Within alt cycles, you should crank up risk when the trend first reverses and begin to gradually protect capital as time passes. People lose because they do the exact opposite, slow early and increasingly greedy with time. So even looking at Bitcoin here, which, Phantom as an example, is more obvious that this is a terrible time to buy. It's up 266%. I'm not going to say it's a terrible time to buy because it could turn out to actually be a good time to buy. What I'm saying is it's an extraordinarily risky time to buy, right? Looking at Bitcoin here, we've broken the trend line. This is bullish. I do think that we very likely get some sort of a continuation. That's usually what happens in a bear market rally. That's usually what happens when you break all sorts of bear market signals or bear market structures. Right? So I do think that the most likely scenario is upwards and onwards. But what if it's not? And there's a significant chance that it's not. And you're laying on all the risk right here. I don't think that's very smart. The place to layer on the risk was, when we broke our 21-week simple moving average, or when we printed bullish divergence a number of times, right? On the daily here, we can go and find, oh, look, bullish divergence right there. Okay. So there's all sorts of trend reversal signals that we can look at, and sitting and watching, not being allocated to the market right now and sitting and watching. And I know the market's kind of recently reset with a turnover of the daily, things on the side right here, percentages. But looking at stuff just completely rip upwards, looking at Arweave just completely rip upwards at 88% plus and not being allocated, I understand it's very painful. It's very painful to watch everybody make money and realize that, hey, why am I not making as much money as I should be? Then what happens is you say, oh, Arweave is pumping 10% every single day. Why don't I just jump in? And then this happens, and you've found a way to lose money. You found a way to lose money when the market has been broken trend into a bullish trend. That is, at the same time, do we want to necessarily look for shorts in a bullish trend? Not really. I'm not a big fan of of looking for longs in a bearish trend, although I do look for longs more frequently than shorts, just because my trading stats tell me that I'm more profitable when I'm taking long trades than short trades. But we don't really want to be fighting the trend either. We can look for shorts, sure. We've looked at some key resistance levels, sure. But if you've been trying to short this right here, like, you've made zero money. There's been like absolutely zero pullbacks, and we don't really know if there's going to be a pullback. Now, I think there's probably going to be one down to the 21-week simple moving average for a lot of cryptocurrencies. I think we're going to see this gut check and then probably follow it up with continuation. I think the rest of Q1 is likely to be pretty solid. Obviously, the S&P 500 needs to hold. So we're kind of doing a little mini market update here within, while I'm trying to explain this concept to people and tell people, look, have some discipline. Have some discipline. If you did not have the discipline to buy, when we talked about this being a bottom, right? Because of the bullish divergence on the weekly, if you not have the discipline to buy down here, have the discipline to at least not buy up here and wait for another opportunity, right? You have to be patient. You have to be disciplined. Buying here, right? Buying here is neither patient nor disciplined, right? And I know, yes, we've broken some bear market structure, right? So if your strategy, unless your strategy is literally waiting for this as your long trigger, then it's probably not a good time to buy. Now, could this turn out to be an okay time to buy? Yeah, I mean, we've broken the bear market structure, but the yield curve is still super inverted. Things are still really, really rough. The time to buy was much earlier on. Now, I would argue, is actually the time to start taking risk off. Right? People lose because they do the exact opposite. What do they do the exact opposite of? They crank up risk when the trend, they do the opposite of cranking up the risk when the trend first reverses and begin to gradually protect capital as time passes. They do the opposite of that. I know I just butchered that explanation, but you get the picture, right? Now is the actual, we've gotten a really nice leg up out of crypto. We may get continuation, but the kind of the base case that we've been talking about here with Bitcoin is, look, we have bearish divergence. We have bearish divergence here, right? It would be pretty normal for us to get a correction. Now, on the daily, we do have, to be fair, there's kind of some mixed signals here because we do at the same time have bullish divergence here. So if we start to see a breakout upwards, this could be a very painful, very, very painful bear market rally for anybody who's sidelined. But taking 5, 10, 15% risk off right now, if you've already been allocated to a move like this, that's a good idea, in my opinion, right? Because this is what happened last bear market cycle, but we could just as easily see something like this play out this market cycle. Not all market cycles are going to be the exact same. So while continuation is the base case, and honestly, probably the path of most pain for most people, because most people are probably under allocated here after being shaken out by the bear market. While the path of most pain is, in most likely scenarios, is further upside, in my opinion, we could just as easily get a pullback to the 21-week simple moving average. And that simple mean reversion would actually be devastating for altcoins and devastating for a lot of people that are buying right now, right? If you're buying, let's just take let's think, all right, a 19-20% correction for Bitcoin, really off the top here, back down to the 21-week simple moving average, would be about a 20 to 21% correction. If you're aping into Phantom right now at 61 cents, and remember, I'm a big fan of Phantom. I've bought it down here when the fundamentals changed, and what's his face? I'm blanking on his name. Andre Cronje talked about released the report that said they basically have, like, I think it's like $100 million liquid, and they have 30 years of runway. That was extraordinarily bullish. This is very bullish. And I added Phantom to the B tier, which is a top 10 cryptocurrency in my book. But is it smart to buy up here? No. We get a 20% correction out of Bitcoin, just a simple mean reversion out of Bitcoin. There's a very strong chance that we get a mean reversion out of Phantom, and Phantom comes back 54%. So if you want a really fast way to lose 50% of a position or 50% of your capital in an investment, buying when a mean reversion is a strong likelihood, when you're very overextended against that mean, is a really good way to do so. right? So I know kind of my tone has been lecturing, but it pains me to see people doing this over and over and over again. And look, if you buy Phantom up here, for your sake, I hope it runs to $5, $7, $10. But we're still in a bear market, more than likely bear market rally. The economy does not look great by any means. I think it's I just really want people to understand the risks that they're taking by just aping into the market, expecting continuation after a massive, massive move. So while I do expect continuation as the most likely scenario, you really got to be careful and disciplined. And I'm also in just a different situation, right? Like, I know it's painful to be sidelined. I know it's painful to be sidelined when the market's pumping. That's why we go through painstaking effort to stay in the market, even when it's a bear market, and look for these signals that the trend is reversing. Look for the signal within the noise. All right, guys. I know that was kind of a weird market update video. That was more just kind of like me taking a lecturous tone, but I really hope it helps somebody out there avoid making a bad decision. Even if in hindsight, or more, let's just say, I hope it helps people make more disciplined decisions, whether they turn out to be right or wrong. In the long term, taking more disciplined approaches towards investing and trading is going to yield better results. Now, before I get into the Sistine Research in just a second, anything that doesn't mean we can't buy up here. It just means that everything, in my opinion, and my strategy dictates everything up here needs to be a very quick scalp or shorter term swing trade, like a couple of days, right? We get a pull back here to support. Yeah, I'll take a long position, right? We'll do our margin pressure levels. We'll look for the support here. I'll take a long position, and I'm going to cut it right there, or I'm going to cut it as soon as we get back here and start trading the range, right? We can still take shorter term trades here, but I'm talking about some like longer term positions, just like saying, oh, I'll buy Bitcoin at 23K. That seems like a good place to buy it. Well, it's kind of overextended right now, and you do have downside risk. All right. Check out Sistine Research if you want to join the Discord group. It's $9 a month. We got to keep those bots out, keep the scammers out. This is a really technical analysis heavy Discord, but also fundamental analysis as well, and a great community to help you stay tuned to what's happening in the crypto market, bear market or bull market. Check out the Research Hub. I did just add, it came out to like about 20 pages actually, the blockchain gaming, and those pages do have a lot of pictures. So it's not 20 pages of just straight writing, but I did put out the blockchain gaming research report. So this isn't necessarily picking projects. I am going to upload a project watch list for blockchain, for the blockchain gaming space or blockchain gaming narrative that I expect us to get. This is more about how to operate and understand blockchain gaming in a way that can help you better navigate from an investing, trading, and even collecting or playing strategy or standpoint as blockchain gaming becomes a larger narrative. So we've got the research reports, the plays, the principles, a dashboard here. So far, just one dashboard. And then we do have the airdrop guide, which is 8 airdrop guides, which I do believe will very likely, no guarantees here, very likely pay for your subscription to the Research Hub. At least that's the goal for the airdrop. My goal for the airdrop guides is to basically help people offset the cost of a Sistine Research subscription. That's it. So no guarantees there because they are speculative, but they're like basically extremely low risk, low cost ways of making money in the crypto space. And then we do have the professional group, which meets Wednesdays, 5 p.m. Eastern time. And that's a private group within the Discord of more dedicated crypto investors. Guys, thanks so much for tuning in. We'll catch you later. Peace.